All right. Good morning. Good morning. Good morning. Happy Tuesday. Let me know if you guys can hear my voice, see my screen. Perfect, perfect, perfect. It was a very good Gartley we had on the NASDAQ, wasn't it? Played out perfectly. Anyway, welcome back, guys, to the live trading room, New York live trading room, one of the two live trading rooms we have here at Tier 1 Trading. Not streaming the Trading View this morning because my computer or Trading View is giving me problems, but we are on YouTube for the first trading idea as usual. I think maybe Twitter as well. So if you guys are listening, we do this each and every morning or every Tuesday, Wednesday, and Thursday, live streaming on YouTube and maybe Twitter from now on. Who knows? Sharing with you the top trading idea that's on my radar for the day, along with some discussion that we usually have. But of course, if you want to catch the full thing, we're in here a few hours each day for a London session and a New York session. And you can access that over at tier1trading.com. We've got an interesting, well, some interesting shifts, right? So in the weekend video, we talked a lot about the war, right? How I was away Friday, but came back to see some massive moves in the market. And it was the war talk and the market flooding from one way to another way, right? Whenever there's talk of something that can be highly impactful, the market wants to be as safe as possible. I then saw on Saturday or Sunday when I was recording the weekend trading edge video that some of those talks were going to be walked back, or there were signs that some of those war talks are going to be walked back, and then we started seeing some reversals in the market. And I warned you guys, like you want to stay away from that stuff. There's no need to try to chase news like that. You're always going to be late, right? We don't know what's going on. We're not in those meetings. We don't have that inside information. The best thing possible is to be safe and keep your powder dry. Now, it looks like those talks have gone away, and now the market can get back to what it was focused on before. U.S. inflation and monetary policy across the world. So we've got some PPI coming out today, 8:30. I want to say, I don't remember, but that's usually the landmark for it. Yep, 8:30. We've got PPI coming out for the dollar. We've got some CPI coming out tomorrow. We've got some Fed FOMC minutes coming out as well. We'll talk about the tomorrow stuff tomorrow. But it looks like we can get back to a regular week of trading instead of hiding under our computer desk and fearing the markets or fearing whatever's going to happen in the markets. So I got a few things on my radar today. We are going to start though for today's trade with a trade I'm actually in, but we're not going to talk about the trade I'm actually in. It's going to be a little bit weird, but we're going to take a look at, I usually don't like looking at trades I'm in because we talk a lot about trading psychology and all that fun stuff. If you're involved in a trade, guys, is there any benefit to watching it? Is there any benefit to watching it tick up, tick down? No, right? You're just going to drive yourself crazy. You're going to drive yourself crazy, and you're going to be more likely to make a psychological mistake, right? Yeah, here we go. Now, if you're doing active trade management, then yes, there we go. Active trade management is yes. But typically with active trade management, you have a set requirement that you're looking for, and typically that requirement comes at a time. So you're either looking for a certain level to be hit before managing your stops, or maybe you're looking for a certain close. So even in those situations, you may have to peek in every once in a while, but depending on what you're trailing, maybe it's every 5 minutes, every 15 minutes, every hour, depending on your time duration. But that's a good point. But we got a few things happening here on the euro yen. First of all, the big thing happened, right? Can you guys see the big thing? We talked about this a few weeks ago. What was the big thing that happened? It's over now, so don't enter it, but it happened. Yep, the big thing that happened was this bad boy right here. Our X to A to B, B to C, C to D, bearish Gartley, right? Came to a T. We talk about I personally use limit orders on advanced pattern formations because I just want to be involved at the completion point. But we often talk about using zones, as a more conservative method. Now it doesn't matter if you're more conservative, more aggressive. That's a personal opinion, but this would be a good example where the aggressive trader benefited. The conservative trader had to kind of wait on the sidelines for nothing to happen. Euro yen was also, if you guys have been following us, before the Gartley, we were looking at the pullback trade. We actually had a pullback trade on here last week. We had the rising channel right here that broke our VS1 level, our previous zone of structure resistance. We pulled back a little bit relief into that, and then we extended up. So we talked about doubling up on that trade, potential buying opportunity right into a selling opportunity. So this was a beauty. Then war talk came in. Everyone flushed to the yen because the yen is a safe haven pair. We saw this big dip down. And then we started to consolidate. And you know that consolidation breeds patterns, right? We go back to the daily, you can see a little inside bar action happening here, which means we're trading within a tight range. And what we had here on the euro yen, if we go one more time frame down, was another advanced pattern formation. This one may be a little bit harder to see, but we have, and I'm not going to talk about it too much because I'm in it, I don't want to jinx it, but an X to A to B, B to C, and then a CD completion right up here for a bear Gartley. Now, that's not what I wanted to talk about today because this trading opportunity has already passed. Well, technically it's at market. You can still sell it right now. Take that back. You can still sell it right now. It is at the entry. But I want to talk about the potential next trading opportunity that I see. And the next trading opportunity I see now, I hope it doesn't happen. But I got to be non-biased here. I hope it doesn't happen. But when we go through this process of evaluating the market, we're running through these kind of scenarios in our head, right? If then, and very similar to if you guys were in the Q&A yesterday, we broke down the trading plan, right? And we saw those if then syntaxes of we had two traders that were both counter trend and trend continuation traders. So they were essentially looking at decision points in the market, key areas of support and resistance, and saying, okay, well, if we do this here, then I would expect that, and I'll look for this type of trading opportunity. If we do that there, then I would expect this and look for that type of trading opportunity. So we always want to run through those processes in our head. And the one that stands out for me actually comes at the top of the range, right? Those yellow lines are the ones that I drew out from the daily that represents that range. This movement inside is the current day's inside bar. These are the two important levels for me, right? If price were to violate the level to the downside, right, it opens up a lot of opportunity, right? If price were to violate this level to the downside, so the lows here, this low VS1 level, right, where would you predict that price is likely to go? Or let's take it back to the more remedial. If price were to break that VS1 level to the downside, then what direction would you predict that price is likely to continue in next? Make it really simple. Or maybe not simple. I keep forgetting. Not everyone has rules, or has been taught to kind of look at the market in this perspective. When they are, it's always an eye opener, or it's like, wow, I can't believe it's that simple. Yeah, trading is simple. It's not easy, right? Don't get me wrong. Trading is not easy by any means, but it's simpler. It's simpler than you think, right? Price is likely to continue lower, and then if we're likely to continue lower, right, then we need to do what we need to do next is predict where do we think price is likely to go lower to, right? We're not going to worry about that right now because price is nowhere near the low side, but that's one of the scenarios that you would run through. Another scenario is to the upside, right? We have our upside line right here. I'm going to erase the Gartley. If we can violate this level, because we're closer to this level right now, so it's perhaps more important. If we were to violate this level of 131.40s, then the question is, what direction do we think price is likely to go in next? I think we can all agree, bullish. If we're likely to go bullish, then where are we likely to go bullish to? So the skill of trading comes from the simple part is making these predictions, in my opinion, like directional predictions. The part that takes a little bit more skill is pinpointing where, and that's where practice on the chart. That's where understanding your tools and how to use them. That's where all of that comes into play. So that part does take a lot of practice. But yeah, I think we're likely to go higher. Oliver says 132. Brad says 132. Orsi says 133.20. We can mark a few of those on our charts. So 132 is going to be right here. right in basically the meat of this previous level of consolidation, or she says 133, looking at a retest of previous structure high. So you got an aggressive prediction up at 133s, you got a conservative prediction at 132s, right? So you've essentially done half the battle right now. You've made a prediction, a future prediction. Again, we don't know if this is going to happen, but we're waiting for if price action violates that level. Then we're looking here. You've predicted where you think price is likely to continue to. So now the next question you have to ask yourself is, does this present a trading opportunity for me? And that's a question that involves, is this in your trading style, right? Is this something you can trade? If you are, let's say, only a Gartley pattern trader, then this is meaningless to you as far as tradability because you can't do it. It's not in your rules. But if you're a breakout trader, if you're a continuation trader, right, you can certainly take advantage of this. So you have to ask yourself the question, is this something that is tradable per my trading plan? And the next question is there enough meat on the bone? Which essentially means, is there enough room for me to profit from a move from 131.40s to either 132s or 133s? And if all those boxes check yes, then what do you have? By the way, there's a lot of these setups out there because again, we're seeing the same movement in a lot of the markets. We're seeing the Friday flood, and then we're seeing the retracement from those. We're seeing a lot of like sloppy head and shoulders, for lack of a better setup. We're seeing a lot of sloppy head and shoulders in the market. There's about, and a lot of them are causing cipher patterns as well. You take a look on like the yen twins, New Zealand yen, Canada yen, Aussie yen. I think all three of them have the exact same cipher pattern setting up as well. So you see this kind of wacky movement happening, and this one was close. We didn't extend, but you see this kind of wacky movement like this happening, and then we're retracing all of it. The sloppiness is offering a lot of opportunities out there in the market, but it's very similar across the board. But yeah, if all the boxes check, then you have a trade setup. And now the next part, right? Identify, predict, decide, execute, right? We identified, we predict it. We've halfway decided. We've decided that this is a trade that we should focus our attention on. What's the next part of the decision method? We've decided that this is something that is worthy of my attention. I do not need to just erase my charts and go to the next one. This is worthy of my attention. It is a trading opportunity. There's enough meat on the bone to profit, right? What is the next step we need to do? For you guys that are new watching, maybe you're confused by the analysis, maybe the verbiage. If there's one thing you can take from this, the process. Take the process away from it, the process that we're doing. We're not just hopping into a chart and being like, oh, let's buy, oh, let's sell, right? We're not doing all that stuff, right? There is a very strict process in which we're following to decide if something is worthy of a trading opportunity. And if you stick to that process, you'll be very consistent in your trading. If you're very consistent in your trading, both on the analysis side and the execution side, the execution side takes into psychology, which is it's a whole different story, but then you can have consistent profits. But yeah, we need to decide, how can I enter a trade? And this is going to vary depending on the type of trader that you are. So again, let's say Ivis is a breakout trader. Maybe Ivis says, you know what, Akil? I just put a buy stop right above the highs. If we pop above those highs, boom, I'm in, right? Valid entry reason, right? Maybe not the same one that Oliver would use, but that's what's in Ivis's plan. Maybe Brad is like, you know what, I'm a pullback trader, Akil. So I want to see a violation of this level. Oh, wrong tool. Break and close above. And I want to see a pullback in the structure. And then I want to look for the pullback on the way up, right? Perfectly fine. Maybe who am I going to mess with next? Someone on maybe Steven. Maybe Steven is a lower time frame trader, says Akil. If we break that level on the 60, then I'm going to drop down to the range bar charts, right? We know the range bar charts give us a different perspective in the market. By the way, I hope it's clear, YouTube. I'm using a different streaming thing today, so hopefully it's clear and not blurry. I've been having lots of problems with blurry uploads. No one's told me, but I've seen it. I checked it the other day, and I'm like, why is it blurry? It bothers me. That ever, you guys in the live room, you're not watching the recordings because you're here live. But Some of the recordings have been blurry from the room, which is probably because I'm streaming like 8 different places. But anyway, so maybe Steven says, hey, I'm going to wait here on the range bar chart, and I'm going to wait for a break of this level. And I'm going to look for some small wigglage to take advantage of everything. So again, how you decide to enter the trade, that is specifically up to you. Generally, there's no wrong or right reasons unless you're breaking one of the fundamental rules. But this is a decent trading opportunity. Lots of profit to 60 pips of potential profit, maybe more depending on the pullback, up to that 132 level. Even more up to 133. You want to take a quick look real quick. We've been playing around with our volume profile and fibs. I know there's a 618 up in that level too. Let me get down to an hourly. If we take a look at a Fibonacci retracement, excuse me, from our swing high to swing low, right? Our 133.15 level down to our 130 even handle. All right, you see 618 Fibonacci retracement right at 131.97s. Not going to have any inversions there. I checked that earlier. So I know you guys are thinking it already. Close. We have some a little bit lower. But if we take our volume profile, let's see from our same swing high to swing low. You're going to see that obviously the bulk of our volume is right now during this consolidation period. The second highest point, however, is going to be right at this consolidative period. All right. So again, I like 132s personally as a level. I think 133s is the top of the swing point. That's a great level as well. Now I'm hoping this never happens. Again, I'm involved in the Gartley, so I hope it. Well, I hope we retrace first. I hope this ends up playing out like a slanted head and shoulders, and maybe the market, right? We have this rising channel, maybe gives a little bit of a pullback here, right? Before we rally up. I'll take that. That means I can win on the way down. My position is free, and I can look for another opportunity on the way up. Selfish, I know. I'm a trader, I'm a mercenary. Gosh, don't judge me. Selfish. Any questions here on Euro Yen? Jennifer, hey Jennifer, what platform do you use? I use NinjaTrader and TradingView. NinjaTrader is my 1A, TradingView is my 1B. We actually had a very good discussion yesterday. Well, let's do this. So we had a good discussion yesterday in our Q&A session about what to look for when choosing a platform. I turned it into a podcast, the Trading Coach podcast, but it's not going to be out until March. But I believe Jason Grace and myself did a Trader Coffee Break episode on it as well. Because we tend to, our coffee break episodes are made off of the question that you guys asked. So if you want to check out more details on how to choose a trading platform, let me just see something real quick. I believe we did it, Trader Coffee Break. One of these. There we go. Best trading platform or apps. If you go back to this video down here, we have a little bit of discussion about kind of different platforms, different apps, some of the pros and cons. Obviously, we're not telling you which to use, which to not use, but just a little bit of information based on our experience in the markets. So you can check that out. But yeah, NinjaTrader was the black charts, the first ones. TradingView is the blended blue, my fancy charts. Akil, what is the vertical range tool? Give me a second. I got to sneeze. There we go. It is a volume measurement, but instead of volume at the bottom of your chart, so taken like on a session by session or a call sessions candle by candle basis. So you see the volume at the bottom of your chart, right? Each of these little bars represents the volume of each of these candles. So this big red one is the yellow one here. This is a big anomaly, by the way, guys, right? We talked about anomalies in the market. Right? Look at this. We got two candles side by side. One is high momentum, one is lower momentum. One has lower volume, one has higher volume, right? Anomaly right here, right? This shouldn't be. It should be reversed. But this is going to take in volume by candle basis. This is going to be a range-based volume, the horizontal one. So instead of it's looking essentially at, if you can imagine like this over here, it's looking at the amount of volume at specific ranges in the market. So reading the volume at this range and this range and this range and this range, and kind of showing you which price levels, not necessarily candlesticks, but which price levels the higher or lower volume is at. So it's a cool tool we've been experimenting with. If you're familiar with support and resistance, you can pretty much spot on what your volume spikes are going to be. But what we found it to be useful in is helping with pinpoint some stuff. So like, and we're experimenting with it for a year. But when we do like target projections, I guess you can do the same thing for stops. We use target projections. Typically, we're looking for confluences. So we're looking at, I only speak for myself. I look for levels of structure first and foremost. So I'm looking for a level of structure first, and then I'll draw in fibs, maybe AB equals CD. And I'm looking to really shrink down that zone, meaning I have a zone of structure, but where specifically in that zone should I be getting that entry at, right? Because sometimes we have larger zones, and if you're a little bit too late, you're going to get skunked out. So it looks like it's been a pretty good helper as far as another part of confluence we can use to narrow down that zone by looking for the zone that has the most volume added. So it's been a pretty cool experiment. Again, it's I don't want to say useless. If you know support and resistance, you're good at, you can tell what levels are important and what's not important. And I'm always going to default to that because I'm price action first. Me and volume have an interesting relationship. But I have found it to be useful. We've been playing around with it in the live room. Brad says, what volume profile tool are you using? I don't know. It's called volume spread analysis, I think. Should be a favorite. Volume spread for VSA. I have a love-hate relationship with that as well. But volume spread for VSA. Ryan says, interesting. Have seen it several times and wondering if it could sharpen anything up for me. Give it a try. What we're always looking for. And again, so for you guys that are new, right? So I was highly against volume for many, many years of my trading career because of specifically in the Forex market, because there's no real volume in the Forex market. So for a long time, I was like, volume sucks, don't use it, blah, 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 blah. And obviously I have a growth mindset. I continue to learn. I continue to evolve as a trader. And over the years, I am open to the discussion. I am open to new information. And I've turned a stone on that initial view. Now this still isn't actual volume. Don't get me wrong. But sometimes the best you can get is still valuable. So I started revisiting it about 2 years ago and just studying it more and more and more and seeing if it can add a little bit of an edge in my trading, because that's at the point that's the point I'm at right now in my trading. So I've been doing very well for a good period of time now. So there's nothing fundamentally that needs to change. I don't need to ditch my strategy and ditch what I'm looking at and trade something new. But what I'm looking for is small edges. So if there's something that can get me into, and this is something that will be coming next in my trading career, if there's something that can get me a little bit more aggressive with entries, then I want to find that little edge. If there's something that can get me a little bit better replacing stop losses, I want to find that little edge. Years ago, something I added was active trade management, right? Where I started implementing. Before I was just like, hey, stop loss is here, target is here. One is going to be hit, one's not going to be hit. Don't touch anything. I added active trade management as a way to reduce risk while a trade was going in my direction. And again, it has I would say most of my trades, I don't even get the chance to actively trade manage because I'm a counter trend trader. So most counter trend trades, you're not going to get that opportunity. But on the handful of trades that I do, it gives me a little bit of an edge. So we're always looking for that little inch, right? It reminds me of as a football player, and all we're looking for is an inch. If you're a cornerback and you give me an inch, I'm going to take it. A quarterback is looking for that little inch, right, of separation to fit the ball in there. So if this is something that can provide a little bit of an edge, one extra inch in the market, it's pushing our trading in the right direction. And going back to the Kaizen philosophy, continuous improvement, right? We're just trying to improve by 1%. We're not trying to improve by 100% every day or make some big drastic jumps. If I can get 1% better each day, just keep moving in the right direction, you'll eventually meet those bigger goals. So cool talk. What I'm going to do is I'm going to shut down the live stream here on YouTube and Twitter. Do me a favor before you guys leave, hit that like button. We do this for free to give you a chance to look into the live room. So the least you can do is hit that like button. If you have any questions that I didn't answer, leave it in the comment section below. We'll read through after the session is done. But I will see you guys tomorrow, same time, same place, 7:30 New York time for this live stream. Live room members, we're going to continue on and look at some more opportunities.